Hello, everyone. Thank you so much for joining us for today's webinar. My name is Linda LaFortune. I'm the Director of Learning and Client Support at CUInsight and your host for this event on an open banking discussion. Thank you for taking the time to join us today and allow me to introduce today's experts. Joining us are Ali Yaris, Financial Access Partnerships at Plaid, and Jamie Lang, Alkami's API Product Manager. Ali is an executive on the network partnerships team at Plaid, where she leads partnerships and relationships across major financial institutions and large-scale platform providers, in addition to digital banking and banking-as-a-service initiatives. Through her team's work, more than 7,200 institutions and fintechs now have access to Plaid's API-based open finance solutions. So please join me in welcoming Ali, sorry, already getting the two confused. And Jamie is a seasoned product manager known for her client-focused vision and expertise in delivering innovative financial solutions. Her career has spanned various roles from operations management to product development, allowing her to build a comprehensive understanding of the financial space. Thank you both for being here to lead today's session, and we can jump right in. Let me just add Jamie here. All right, so today's topic is on the minds of banking leaders across the industry. Open banking presents a transformative shift in the financial services industry that is revolutionizing how consumers interact with their financial data. Jamie, let's start with you, and can you set the stage by providing an overview of what open banking is, how it works, and how it differs from traditional banking?
Yeah. And first, I'd like to say, Linda, thank you and CUInsight for having us. We're excited to talk about open banking and what that means.
Yeah.
So I kind of want to go over the overall structure of open banking. It's really a system that allows financial institutions to share consumer financial data with authorized third-party partners through an application programming interface, or as we refer to, APIs. The main idea behind open banking is to give consumers more control over their financial data and allow them to benefit from a wider range of financial services, such as, personal finance management, faster payments, or access to more competitive loan rates. How open banking works is I've broken it down into 4 different sections. So first would be consumer consent. So it's important for us to understand with open banking, consumers must give explicit consent for their financial data to be shared with these third parties. This could be a wide range of services like budgeting applications, loan applications, or payment platforms. Second is APIs. Just to break it down simplistically, this is how we communicate with each other. So it's the technical interface that allows systems to share a standardized spec and to transmit that data from the consumer's financial institution over to those third parties. Third is very important, right? It's our third-party providers, and that could be a wide range of larger institutions, aggregator partners like Plaid, or fintechs like Alkami. But we are an important part of kind of being the intermediary of sharing that data and transmitting that through the APIs. And then lastly, the very important part is security and regulation. So open banking operates under strict security and regulatory frameworks, and that really ensures data protection and privacy. The big difference that I want to call out here with open banking versus traditional banking is 4 specific, I would say, data elements, right? So the first is data control. With traditional banking, financial data was held exclusively and still is held exclusively at the financial institution. Consumers really have limited visibility and control over how that data is used. With open banking, like I stated before, the consumer's getting control and access for their financial data, and that's really enabling them to share the information with other banks or fintechs or service providers for additional benefits. Next, I would say a service range. So with traditional banking, we see, credit unions offer a specific range of in-house products and services. Your standard savings accounts, loans, investment options. With open banking, that now opens a more broader range to your consumers of financial services. So they are being able to integrate with third parties that offer maybe a personalized financial automatic saving tool, or multi-bank account management applications that help them look for a lower interest rate. Next, and this is, I would say pros and cons here definitely, but competition and innovation. So yes, open banking does open up competition, but it also allows you to grow as an institution with innovation. So in traditional banking, we see the model be that it really is operated in a silo. There's not a lot of competition, but again, that data is held specifically within that financial institution, and it's limiting that consumer's ability with additional services. With open banking, we really are encouraging collaboration with third-party partners. So driving the innovation, leading to new products and services tailored to that individual's needs. And then lastly, and I think this is a big deal, especially with our younger generation, but payments. So with traditional banking, you kind of see payments as being wire transfers, checks, debit card transactions. With open banking, it really opens up the consumer's options, right? It allows faster, real-time payments directly between parties that are outside of the institution's networks. And for an institution, right, that still means that your consumers are still able to bank with you, but also reduces costs, improving efficiency because it's not going through some of those payment networks you have today. With open banking and credit unions specifically, the credit union represents member-centric offerings, and so does open banking. So it really does tie together with those goals. Personalized member services, enhanced competition, improved financial inclusion, and we'll dive deeper into those three as we move forward.
Fantastic. I've already learned an hour's worth of information, so great job. All right, so Allie, let me jump to you, and can you share some examples of real world applications of open banking that you see in the market to kind of ground it in things that we may be familiar with?
Yeah, that was the textbook intro. So much, Jamie, that was like a master class and so clear on what open banking is. But yeah, maybe to give a couple like really tangible examples for folks to really kind of center yourself on what this looks like for your members. Plaid is a network that connects the two sides of the ecosystem, our financial institution data providers, and then those third parties that Jamie was mentioning. There's sort of an outdated perspective that one side of the network is just traditional FIs, credit unions, community banks, and the other side is fintech apps and services, when in reality, we actually have players participating on both sides. And the regulatory framework that we're going to be entering in, that we'll talk more about, is actually bringing fintechs into the data provider side of the relationship, where they'll need to participate like financial institutions. And we're also seeing a huge amount of adoption from credit unions, community banks, to actually utilize open banking to power experiences within your own apps and websites and technical experiences for your members. Plaid powers a bunch of household names that you're probably familiar with or maybe have utilized in the past, like doing peer-to-peer payments on Venmo or Cash App. You might have seen Plaid in experiences like applying for a loan, where Plaid will be able to pull your payment history to kind of create a better profile there in apps like perhaps Robinhood. As mentioned, though, we have a lot of credit unions who have been kind of at the forefront of this open banking adoption. So it can give a couple specific examples there. Jamie talked about API connectivity. One of our early adopters for building API connectivity for open banking is Michigan State University Federal Credit Union. They were really, I think, ahead of their time in a lot of ways and playing at that competitive edge to provide technical services that mirrored what at the time only the largest financial institutions in the US had access to a handful of years ago. By building that kind of API connectivity, they were really clear on seeing that to retain their younger members, they needed to both offer that community engagement that credit unions are famous for, while also making sure that their users were able to connect out to third-party apps and services that folks are just expecting connectivity to today. A couple other examples, WeQ is a credit union that leverages open banking to help their members with personal financial management. So they're utilizing Plaid's open banking technology to have users have that simple ability to track their expenses all in one place. Viridian Credit Union is another fun example. They're utilizing Plaid's identity verification and anti-fraud solutions to confirm their members are who they say they are, supporting their ability to meet KYC requirements and overall lowering fraud. We know fraud management is really top of mind for the ecosystem. So that's an area we're really excited to see more and more credit unions take advantage.
Yeah, fraud and that payments, as you were both talking about, I don't think my son probably even knows what a check is. So having those options, as you said, as we're moving forward is so important. So let's move on to our next topic with that. There's a lot happening in the world of open banking, especially from, you touched on it a little bit on regulatory standpoint. Allie, can you give us an update of the current regulatory landscape? Because we know there's a lot going on there.
Yeah, so we're in a very exciting moment in the formalization of open banking in the US. The US is a really interesting open banking market in contrast to UK or Europe. Those markets were regulatory driven, so the regulation came first and then the market came second, where in the US, we actually have this incredibly rich existing market of open banking already in existence, right? Plaid alone, 8,000 apps and services, and we're just sort of at the early days. But we're in this exciting moment where the Consumer Financial Protection Bureau is codifying a regulatory framework that really cements the ability for users and consumers to have access to their financial data in what is referred to as 1033. So you might see that in press headlines or just hear it in chatter around the financial institution market right now. Yeah. So from a timeline perspective, this rule has been many, many years in the making. 1033 is part of Dodd-Frank. So you think back to when we're talking here like post-financial crisis. But today, it's really just been a handful of words that say consumers have a right to their data access. There hasn't actually been an actual actionable framework that's super clear and easy to standardize across the market more broadly. And so that's what the CFPB has been working really diligently to figure out an accessible way to facilitate. So in October of last year, they created a draft rule that they shared with the market. There was a major call for comment. I think they received thousands of letters of feedback from trade groups, credit unions, community banks, fintechs, aggregators like Plaid, et cetera. And they've been using the last year to really streamline through that and finalize the rule. The general expectation is that that final rule is going to drop in October of this year. So we're getting super close. So it's going to be an exciting fall for those who are excited about open banking. So we have some expectations based off of the draft rule of what this will look like, but this is obviously going to be subject to change until we see that final rule in October.
Yeah. In response to the changes, do you have any specific expectations for data providers around that?
Yeah, so the root expectation for data providers is pretty simple. It's to make sure that your data is accessible to your users. Jamie did a great job of describing what an API is. So the rule expects that data providers have, in rule lingo, they call it a developer interface, but that just means an API to facilitate data sharing. So today, it's likely that your credit union is already supported in the open banking environment, perhaps on API already, because we actually have, I think, a lot more API adoption than folks maybe realize in the market. But in general, the market was built on a legacy technology solution called screen scraping. And API is the more secure, better, sustainable version of connectivity that we've really been in this multi-year process to move to. So the rules just codifying the expectation that all financial institutions, and that also does include depository and also non-depository. So this is where fintech data providers will also be held if they have Reg E or Reg Z accounts to the rule as well, to make a developer interface, i.e. an API, available. There's a general framework in the draft with tiers based off of asset size. So there's 4 tiers. We can help you find yourself in the tiers if you're not sure yet. This is an area that has potential for change. This is definitely something I think folks will have a close eye on in the final rule. But my assumption would be the vast majority of financial institutions in the US, and particularly credit unions and community banks, are going to fall into tier 3 and tier 4, which gives, based off the draft rule, 30 to 48 months for compliance. So we're talking compliance deadlines in like 2027, 2028. So plenty of time. Most of you are going to be like, well, I think prepared in advance, based off of partnerships like we have with Alkami that might already exist today.
Yeah, it's nice to get the forewarning though, because those things always take so much time for any regulation change. Jamie is a digital banking provider. How is Alkami supporting the open banking movement and addressing this new rule that Ali just spoke about?
Yeah, so Alkami has always been a leading provider in the digital banking solution space. We coded to an open banking spec that we refer to as the Financial Data Exchange, or FDX, into production last year with a partnership with Plaid. We did this, ahead of the regulatory rule to prepare financial institutions for what's coming and what's going to be required through those APIs. By us kind of implementing these open APIs and adopting that FDX secure data sharing framework, Alkami really has been able to kind of see the benefits of that early on. So allowing for compliance with what might come in that section 1033 rule, but then also the smooth ease of transporting data to third parties with the screen scraping that Ali alluded to. We had a lot of issues with consumers not being able to link their accounts to an application like Venmo. So this rule does mandate, consumers to have the right to access their data, share it with third parties, but it also alleviates some of that headache that our financial institutions were experiencing. So, again, Alkami's integration with the FDX standard ensures it's secure the way that we're sending over data. It's a standardized spec, so it makes it easy to work with partners like Ali. It's very transparent as far as data sharing goes, simplistic, and again, helping institutions meet some of those regulatory compliance requirements early and enhancing the digital services for their members.
Well, it's good that it's simplistic to you. This is why people need to talk to you all. And how is Alkami helping financial institutions prepare for these upcoming changes on their end?
Yeah, definitely. Great question. I think definitely at the forefront of everybody's mind today. Again, as the rule is not finalized, all of these are subject to change, right? We're prepared to pivot and look at other items, but we believe we have a pretty good idea as far as what is needed, and it aligns with our business values of allowing institutions to grow their business as well. So first and foremost, the API standard. As I alluded to, the FDX is a spec that many large institutions have already coded to, aggregator partners like Plaid and other third-party solutions. So really easy when we are all coding to the same financial data for the end member. Also the open API framework. So Alkami's digital banking platform supports open banking APIs. And it allows credit unions to build secure connections with third-party services and not only growing their business, but complying with what might come in the Section 1033 rule. Consumer data control. So this is something Alkami had implemented even before we partnered with Plaid, but empowering the consumers to easily manage their data. So, a solution that we offer today within our mobile app allows the end consumer to kind of see who they have given an authorization token to, allowing them to revoke that token today if they don't want to continue to share data with these third parties. But again, it aligns directly with that Section 1033 rule, and we'll continue to look at how to enhance that experience as the rule is finalized. And
Yeah,
then
there's always changes, right, coming along when they start these things.
the last thing I would say is just regulatory compliance support. I think that can be a large ask, right? Especially from some of these smaller institutions. So Alkami always, when we're designing some type of feature, we look at our solutions and we make sure it's designed to help the credit union stay up to date with regulatory compliances. The feature also can assist institutions with compliance reporting, data security, and privacy management, which is a large lift, like I said, for some of these smaller institutions. So that's where Alkami is going to start, and then we'll just continue to evolve as the rule is finalized.
Absolutely, that sounds great. And I'm just going to toss in here because I see some questions coming in, and I think I forgot to mention at the beginning. Please feel free if you do have any questions throughout the presentation to use the Q&A box. We have some time allotted for those at the end, so please feel free to use that. And Allie, I'll jump back to you. As a financial technology provider, how is Plaid supporting the open banking movement as a whole?
Yeah, it's been a huge focus for us for the last 3 to 4 years to really stay at the forefront of supporting financial institutions to make the transition to this open banking future. A big focus, as previously mentioned, is making that ecosystem transition from legacy screen scraping to API-based data connectivity. Over 80% of our traffic is already connected via API. We have access, as mentioned at the beginning, to over 7,200 institutions to move to API. For us, the thing that's really the focus is how can we do this as easily and with as little friction as possible for financial institutions. The most powerful mechanism we have to make this transition is utilizing partnerships with providers like Alkami, who are able to work with us to then power, hundreds of institutions. So that 7,200 institutions that already have access, and those numbers grow every day, is predominantly powered by, around 30 different direct integrations with digital banking providers. So this is a major focus for us. We're also constantly thinking about how to make it as easy as possible for individual credit unions to move to that FDX standard that Jamie mentioned. So we have a whole FDX kind of like suite of solutions to help folks make that transition as easily as possible. We have an in-depth implementation guide. We have solutions engineers who I think I'm obviously biased are the best in the world at helping folks move to the FDX standard. They have experience doing this with now hundreds, if not thousands of institutions. We have a really great developer experience that makes it super easy and fast to move to your API connectivity once you're live with your FTX API. So that's really been kind of the bread and butter of how we have been helping institutions make this transition. And, the regulatory framework creates a mutual understanding that we all need to take this step forward, but the demand has always been there. And it's predominantly driven by that member centricity. As Jamie alluded, the old way of screen scraping type integrations, like it doesn't work in the way that we want an API to perform, right? This is much better sustainable connectivity. And across the market, when we move to API, we hear amazing feedback that folks have seen like steep drop-offs in call center intake, customer support requirements, because it just works seamlessly in a way that's completely frictionless for members. So that's a really exciting value prop to see just happen naturally. And, the 1033 expectation and regulatory requirements are also super top of mind for us. And we want to make sure we're, 100 feet ahead of any expectations for our partners. But that day-to-day, being there for your members, making sure they have a great experience, I think that's still like the primary reason folks are excited about moving to this open banking future.
Yeah, that's great. Anything to enhance that member experience. And I think you touched on this. I just want to make sure that kind of encapsulated what Plaid's doing as a whole to address and prepare for these future changes, right?
Yeah, exactly. And maybe one thing to add there too is I think it's a bit of a common misconception about the 1033 rule that it only applies to data providers. The rule also is creating really high expectations for third parties for those data recipients, as the rule describes them. And Plaid, as the steward for 8,000 plus apps and services, we're really working to make sure that we're also kind of exceeding the bar there. The data recipient expectations from the draft rule, at least, have a much faster timeline than even the data providers do within the first couple of months after the rule drops. And so we're really, running to make sure that we've exceeded any expectations for anyone who's utilizing Plaid as a customer.
Right. Our slide here. Sorry, had a little screen freeze. Jamie, what can credit unions do to prepare for these shifts from your perspective?
Yeah, so now that we've been live on the FDX standard for it's almost a year to the day, right, with Plaid, we want to share what we've learned, what we've worked through with our members, or what credit unions who are maybe doing this on their own without a provider could learn from our experience. So credit unions can take several strategic steps to prepare for the shifts of open banking and the new regulations of the 1033 rule by investing in certain things. So first is API integration. As we stated here, it's a smoother transition. It's how you're going to share data for your members over to third parties or fintechs. It's secure, it's reliable, and we have really seen a large adoption once that was established within our infrastructure. If you are a credit union that is building your own APIs and doing integration, partnering with an aggregator like Plaid was fantastic, right? They're a really great partner to work through solutions with. They've done this many, many times. And they can really help walk you through what that means to connect your member data over to 9,000 applications that they support today. Next, I would say is member-centric approaches. So educating your members about data sharing rights, the benefits of open banking, and just being transparent with how it works. Again, once we really get into the rule and we start sharing with the consumer, here's all the applications that are pulling in your information. If they don't really understand it and they start revoking that could break some of their, fluid automatic setups they have today. Transfer money, right, from Cash App and Venmo, right? So we want to make sure they understand why it's being pulled, how to use that information, how it's going to benefit them. That starts, I think, with educating your staff first, talking about what this rule means, what open banking is, how it shifts, and how it's going to align with your business goals. If you are a credit union that maybe does not want to develop your own API, again, developing strategic partnerships with digital banking platforms like Alkami, who have already done this, is a great way to integrate the necessary technology needed to comply with that rule. Just preparing for the changes. I know Ali and I are talking to you today about this new rule coming out in October, but you as a credit union can also closely monitor the implementation of that section. There are a lot of communities out there that you can join and that you can talk with each other. Alkami has an internal community that allows all of our institutions, developers, IT managers, directors, VPs to chat with each other. What are you doing about the rule? have you had any issues? What was your success stories about the APIs? We welcome that, right? And then also, as stated before, we adhered to a standardized spec called FDX. FDX also has a community. Your developers can join and get involved and be closer to the code that, hopefully is utilized within this role. And then last but not least, and this one is very near and dear to my heart, but investing in clean data. Within the last year, very often I have come across key data that is missing for a member to be able to do this open banking very fluidly. Simple data like ACH format for that checking account, contact information for a user, transaction descriptions. And I know as credit unions merge with each other, sometimes data can be missed. But as we have some time to adhere to this rule, 2047, 2028, I would say number one is invest in time in cleaning up that data or creating a process to put in place when you are adding a new member to your system, accounts are being opened, that standardized information for that member is input into your banking system. Otherwise, once you're live, it becomes a cat and mouse game where you're constantly trying to update information. Right now you guys are catching this early. You can, like I said, establish processes that will eliminate that friction. So those are my suggestions. Again, if you're doing it on your own, great partnerships like Plaid and Alkami have experience, and we're here to help.
Fantastic. I know that clean data piece, having been through a few core conversions in credit unions in my time, it takes so much work, but it's so worth it when you're done with it. It makes such a difference in the end result for sure. Allie, can you share some of your observations and advice for our audience on these topics?
Yeah, Jamie really covered a great breadth there. I think one place to start is just to make sure you have a strong understanding of what connectivity to third parties looks like for your credit union today. And I'm personally happy to do a check for you for the Plaid network. My email is Yaris, as you see my name there, YARRIS@plaid.com. Please email me directly, find me on LinkedIn, and we'll get you connected to the right folks on the team who can get you some connectivity information about how your credit union is already likely connected into the Plaid network, and also any sort of status on your existing connectivity around 1033 compliance and moving to API. Sometimes we meet people and they don't even realize they're already on an API-based connection. So let us help you understand what your options are, because it might be a great story to tell already about what that connectivity looks like. So that's really one, know where your institution's at. And then if you don't already have a path to API, whether that's through a digital banking provider like Alkami or others in the market, then we can work with you on how to get this on your roadmap. I think in general, folks should have a plan for how they'll do this by end of year. That doesn't mean it has to necessarily happen today or in this quarter, but knowing when you would be able to figure this into your technical roadmap, I think is just really essential for that peace of mind. And we're happy to help you kind of walk through some of those technical requirements. Building an FDX specification API is a lot easier than I think folks really understand it to be. The complexity is what Jamie just mentioned around your data on the back end. But for Plaid, a foundational FDX API is 5 endpoints and an authentication flow. So it's much more straightforward than I think folks often think at first glance. And we're really here to help make it digestible, and you can really lean on our experience over the last couple of years to make it even easier for you. There's no reason in this market today to start from scratch. We're really able to help you get a head start.
Perfect. Yeah, it's a great opportunity to lean into that expertise, because it's certainly not an area where I think most of us have that in-depth knowledge that both of you do. So let's look into the future of open banking. Jamie, what's next for Alkami when it comes to this forthcoming regulation?
Yeah, for Alkami, the 1033 regulation really presents an opportunity to continue evolving our digital banking platform and align even more closely with open banking and data sharing standards. So as a reminder, again, even if you're not on an API, for years, your data has been being pulled out of your ecosystem with screen scraping, and not as much control as you're giving with open banking exists today with screen scraping. The end consumer is saying, I want to share my data from the credit union. Credentials are provided to third parties and it's being pulled out anyway. So I like to set the stage as far as risks, is that this allows you more control as a financial institution to what data you're allowing to be pulled out for the member. And then as well as, you know, when we talk about competition, you're going to get a little bit more visibility with open banking as to where your members are shopping. Maybe they have a car loan with you. With open banking, it opens up, you know, different loan rates. It gives you an opportunity to see where your members are shopping, and maybe some additional opportunities to keep that business in-house. As far as our roadmap goes, Alkami will continue to enhance API capabilities. We want to focus on expanding API offerings to ensure, you know, the data flow is very seamless between credit unions, third-party providers, aggregators, and consumers. We are going to closely still continue to follow the rule. With that will come probably regulatory tools. So like I alluded to before, enhancing how your consumers are going to be able to see this data, and what level of management you as a financial institution will have a say in to allow those consumers to maybe revoke that data, or at least explain to them why it's being utilized today. Data security and privacy enhancements is always going to be a top priority at Alkami. So we are continuing to look at advanced encryption, multi-factor authentication, privacy technologies that really ensure consumer data is protected, even as it flows between credit unions and third parties. And again, remember, that is already happening today without those secure infrastructures in place. So adding the API just adds an additional security layer to the data that's already being pulled out of your system. And then lastly, right, I know we've talked about it a lot, but partner ecosystem expansion. So if you're not working with a partner today, a lot of these partners are willing to have a conversation with you, to share their experiences, to again advise on what community networks are already out there today that you could utilize if you're doing this on your own. But all of this, right, Alkami is trying to stay ahead of the regulatory curve and continuous innovation for you as an institution so we can help you grow your business.
Fantastic. Allie, on your side of it, can you share what's in store for Plaid as it relates to the future of open banking and open finance?
Yeah, I think really building off of that last point, I'm just really excited to watch what I think will be a great acceleration and boon for smaller financial institutions and particularly credit unions in this open banking reality. I think there's something really powerful about being able to deliver this amazing technology and ability to extend the member experience that puts you in direct competition with the largest Main Street financial institutions in the US. The same technology, everyone's using that same FDX standard. And at the same time, you're retaining what makes you special as a credit union who's centered around your member experience and providing for your local communities. I just think this is a really, really exciting space that we're going to see a lot of growth from. And, you know, really the spirit of what the CFPB is doing with 1033 is this pro-competition spirit. And I really believe that folks like credit unions are going to be the folks that benefit from that pretty greatly. Part of that, as I mentioned at the beginning, is just this major increase in adoption of open finance solutions within your own walls of your user experience. So things like fraud management, account validation, payments, loan generation, et cetera, that you can really accelerate by utilizing open banking yourself. So in a lot of ways, what's next is like this boom, but also a lot that we haven't seen yet, because the point of pro competition is that there might be new ideas and there might be new use cases. And so it's also awesome to hear from folks on the line about what's top of mind, like what are your pain points? Where do you feel like you're not being served today? Because, we're all evolving together. And I think in this more open network, we're able to really meet that demand and like keep pushing products forward and solutions that really meet your needs.
Yeah, it's exciting. And it's, as you said, competitive advantage and keeping with the member centricity is huge for everyone on the line today, I know. So thank you, Jamie and Allie, for all that information. I'm going to bring up a quick poll here. So everyone should see a poll on their screen. Just to get some insights from you, if you would like more information on any of this, it gives you an opportunity here to let us know what type of information might be helpful for you so that the teams can follow up as is relevant. So we'll give everyone a minute to take a look at that and answer as you'd like. And we will get to questions here in just a second once we're done with the poll. If you entered a question, if we don't have time to get to them all, as long as you put your name in with it, we'll be able to get that to the team. So if there's any follow-up for you, we can get you that as well. And it looks like everyone's getting to this poll. So I am just going to count us back from 5 seconds here, and then we'll close it out and move on to questions. So 5, 4, 3, 2, and 1. Let me end that. And get the poll out of the way. Okay. All right. So let's move on to the questions that have come in. Let me just get a look at these. So Jamie, I'll start with you on this one. How can we educate our members about the benefits and that's a good question, about the benefits and risks of open banking? So really that member education piece.
Yeah, great question. Really, again, talking about member education and transparency. So once some of these rules are in place, and again, it opens up more data visibility for the end consumer, put that information out on your online banking platform, on your webpage. Let them know, hey, this is something exciting. This is a new feature for you to see who is pulling your data. And specifically, right, not even who is pulling it, but what are they pulling? Are they pulling your contact information, maybe your account information, transaction information? And then explain to them, what revoking might mean. I know that there's been a few large banks out there that have already kind of been dabbling with how they're going to communicate with their member. I recently personally got an email that kind of said, hey, this third party's pulling your data. Specifically, they're pulling your transaction data. Let me know if you want to revoke it. If it's okay, stay as is. But it was a fantastic way to get in front of my face to say, this is how this is utilized today. Security standards will require reauthentication within a specific time frame, which it doesn't today. So again, for some of this data that maybe be pulled, but the user doesn't use the application again, it's a way to constantly keep our database clean. And like I said, as we move forward and we see what other financial institutions or fintechs will do, we will share case studies with our clients, and that I hope that it transitions to education to your members to say, hey, here's how this is utilized today. It hopes that, you as an institution might have the lowest interest rate for car loans. That information could be shared via open banking and allow your business to continue to grow. Vice versa with high yield savings accounts. Maybe you have a high interest rate, high CD. We can see this really working in your favor as far as growing your business, innovating to new products. And, I see this as a positive thing for sure.
Fantastic. All right, the next one, Allie, why don't I throw this one to you? What are the common misconceptions about open banking that we should address internally?
Yeah, we've hit on a bunch, I think, already in this conversation, but some of the most common, I think, are one, that this is only an accessible framework for the largest institutions in the US. Embedded in that often is this is going to be really expensive and super time consuming. We have thousands of smaller institutions already live on an API framework with Plaid, and most of that is totally free access that has been facilitated historically and already exists. So that's a great news for everyone. Also within that, we see partners build the FDX framework in as fast as a couple of weeks. This isn't as resource intensive as I think folks always think on the outside, depending on your team and the infrastructure, et cetera. I think another one is that this open banking rule just applies to financial institutions and not to third parties. And I think that's really one of the great benefits of having this regulatory framework is having a really high expectation for all participants in the market to be meeting. So this is really creating a standard that's applicable across market participants.
Fantastic. Okay, and I think we have time for one more question, so I'll let you two battle it out about who's going to take this, or maybe both of you. How should we prioritize open banking initiatives in our overall digital transformation strategy?
Yeah, I'll start with that. I think first, aligning with your own internal business goals. So most credit unions will look to open banking initiatives to directly support your business objectives. You want to increase, consumer engagement, drive innovation, enable really a personalized financial experience, which I think is really the core value of most credit unions. We're very member-centric focused. Also prioritizing the projects that deliver an immediate value. So again, we know this rule is coming down the pipeline in the next couple of years, but there are steps you could take now that will add value to your end consumers and enhance their financial management tools. Regulatory compliance, we kind of touched on it already, but just staying close to the following of that rule and that outcome this October. Leveraging data analytics. So prioritizing initiatives that allow you to harness that data, right? Maybe by pulling in all of this open banking data, you could create a really fantastic financial tool that will help, end consumers manage their finances and get to a better place. Security and trust is always going to be heavily within everybody's framework, I think, especially since it's being opened up to a broader audience. But making that top priority is gonna leverage you to be in a good spot for the 1033 rule. Incremental rollout and flexibility. So we did this with Plaid. It was a fantastic way to kind of get feedback. We rolled this out in phases. So for credit unions looking to adopt an API and working with a partner, yes, we did turn this on for every single institution at Alkami. You also get it on day one when you go live with Alkami on our platform. But when we were initially moving folks over from screen scraping to the API, we didn't move every consumer for that institution at once. We did it on a rolled phased approach. And I can tell you with all of the institutions on Alkami, hardly any calls were made to their call center as consumers were being asked to maybe re-authenticate. It was a very, I would say, flexible approach to the adoption to not have any friction behind the scenes for your end consumer. And then, lastly, I would just say your current digital strategy. Look to see where you want to be in the next couple of years. Cloud adoption, mobile banking improvements, AI-driven personalization, all of that is going to play a big part into the open banking infrastructure that we're going to see in the next couple of years.
Great. Allie, anything to add to that?
Maybe just to keep it short and sweet, I think the sooner you adopt open banking, the sooner you get to reap the benefits. So agree with everything Jamie said, and let us know. I'm sincere in saying you can reach out directly if you want a little guidance on what this looks like from the API connectivity side of the house. And we're really excited for you all to make that transition if you haven't already.
Fantastic. Well, that was a lot of great information. Thank you both, Jamie and Allie, for your time and all that fantastic information. I know everyone benefited a lot from that. Thank you all for joining us today for this event. As a reminder, you will receive a link to the event recording by the end of this week, and we wish everyone a great rest of your day. Thank you, everyone.